I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for being here online with me today.
Thank you so much for having me, Charlotte.
Yeah, of course. It's always great to have you on to talk. And we're speaking today on July 27th. It's a Tuesday. We have the FOMC meeting happening today and tomorrow. So I want to start there. I wonder what news you're expecting to see come out of that meeting, anything that you think investors should be aware of.
Yeah, so definitely an important meeting because the Fed has been dropping signals about potentially cutting back on their bond buying. Now, that's different than the interest rate hikes. We know they're not going to raise interest rates, but it's a matter of will they start to taper in the bond buying. And that's going to be something I'll be looking for really closely in their wording. If they do decide to start to taper, do they give us a date when it will start? How much? So I think they're doing 120 billion right now. Do they start at 10 billion tapering per month? The market might be okay with that. What do they also say about the Delta variant, which is now exploding in the United States here in terms of cases? Does that potentially push off the interest rate hikes as well? So there's lots of stuff that it's going to be really interesting to see what they say in the meeting when they come out with that.
Yeah, and for you, as we know, you're trading in the market every day. Are there any things you're doing either while this meeting is going on or in advance of it, or things you could be looking to do afterwards when we do get some signal on what the Fed is thinking?
I'll be watching interest rates particularly closely because the interest rates in the bond market really will be the first to decipher what the Fed says and then react to it. So if we see interest rates not move at all, then it's probably clear sailing in the short term for neutral to upside bias on the markets. I'm definitely expecting more of the chance of a pullback, although I don't know if it'll come right on the heels of the Fed. But at some point, when they're printing this much money, when inflation continues to be this hot, even with the Delta variant, you're not seeing shutdowns here in the United States. So the economy is still robustly booming. They have to, at some point, start to at least cut back on their bond buying, which works as a tightening mechanism.
Right. And you mentioned inflation being hot, which is something that the Fed doesn't necessarily seem to agree on. Do you think we'll have any signals there from this meeting that we have this week?
Yeah, I think it's going to be key what Jerome Powell says. So, when he was testifying in front of Congress, I think it was a week ago or so, he did come out and admit that inflation was hotter than expected, but he's still kind of stuck on that transitory path. Does he continue to kind of adamantly say it's transitory? It's a tightrope he has to walk because if he says anything different and admits that he might have been wrong or might be wrong, the markets will lose confidence in the Fed and could throw a little bit of a panic sell off there. So it's going to be interesting to see, does he kind of tweak his wording? I mean, this is the crazy thing about the Fed. I mean, everyone watches every little word. Does one word in the statement change? And then how do you read that? And that's really what the market and the bond market will be watching. And then by default, the stock market will react.
Right. And of course, for our audience, very interested in gold, what could we see from this meeting that may have an impact on gold? How do you potentially see gold reacting?
Yeah, so let's take a look at the chart on the GLD, which is the ETF that tracks gold here. I think this will be interesting for people. So what we're looking at is that, gold has been in a long consolidation phase. So we had that big run from the COVID lows in 2020 all the way up to the all-time highs. And then since then, you've been just going sideways to lower, literally for, over a year now. What I'm focusing in on is a pattern formation, an inverse head and shoulders here, which is a bullish pattern formation. Now, it only triggers when this trend line gets broken to the upside. But if it does trigger, or when it does trigger, you're looking at upside on the GLD to at least 200. Maybe even a little bit above it. So, I mean, that would put gold at new all-time highs in the short term here if that did play out. So I'm keeping a close eye on that. In terms of the downside, I wouldn't want to see this lower trend line break. As long as that trend line holds, I think gold is in a good position here. It might consolidate for another couple months, but ultimately when it breaks out, that's where you get your next leg up. And again, I think it's important to recognize whether or not we see a sell off on the Fed or whether it pops on the Fed, that's just an interim short term reaction. You have to just, as a gold investor, if you're a long term gold investor, you just have to continue to look at the facts, which are the money printing is continuing. China continues to go on this path of saying the digital yuan, they want the digital yuan to be the new global reserve currency, which will ultimately cause downward pressure on the dollar. That's also inflationary and good for gold. So all of these factors that are going to play out over the next 2, 5, 10 years will and should drive up gold's price.
Right. So important to remember to think long term, but very difficult to do.
Yeah.
So for you, I remember you have a 2100 price target for gold in 2021. Are we still looking like we're on track to see that by the end of the year?
Yes, so I believe so. It might come towards the end of the year, maybe even early next year. It's so tough to figure out the timing on
Hmm.
these things. But really, what I'm following is that neckline head and shoulder inverse head and shoulder break. Once that happens, it should be a pretty sharp move to the upside. And again, I think November, December would be when that would happen if it's going to happen.
All right, well, we'll see how that goes. I want to follow up on another topic that we touched on the last time we spoke, which was the potential correction in the S&P 500 that you thought could be coming. You mentioned you'd be looking for a confirmation signal to see if that would happen. So I thought it would be great to learn a little bit more about what you mean when you talk about confirmation signal, and if you could go over what you've seen since we were speaking last time.
Yeah, absolutely. So the confirmation signal is something that I've discovered is a very helpful tool when figuring out if something is a fake breakdown or a real breakdown or a fake breakout or a real breakout. And the key is this, is that institutional money flow and algorithms are set up to try to push investors to the limits and get them to exit their positions or enter short positions or long positions and get them on the wrong side of the market. And they do this because that's how they make their money. So if you look at the Goldman Sachs trading desk or any of these other trading desks at hedge funds, their goal is to push people to a level where they think something is happening. They jump on that side, and then the institutions will reverse that trade and make them wrong. Ultimately, they'll exit the trade for a loss. So when you look at a major trend line and you see a close below, you have to understand that could be a fake out. Now, what I found is that if you get a secondary close below that breakdown level, all right, that's where it's unlikely at that point to be a fake out, right? So institutions aren't going to let something dangle below a major trend line of support for long periods because it opens them up to vulnerabilities for bigger losses. So what they'll do is they'll pierce a level. We saw this on Bitcoin a while back where they pierced 30,000, then they ripped it up. Then about a week ago or less than a week ago, they closed Bitcoin below 30,000 to fool people even more. So people got fooled on that initial pierce and it bounced. Then they closed Bitcoin below. They fooled people again and have pushed Bitcoin up. So on Bitcoin, for instance, or the S&P, you want to find a major trend line and look for 2 consecutive closes below that level, which will then lower the probabilities that it's a fake out by the institution.
Really interesting. And let's move you over to Bitcoin as well. I remember that you were near-term bearish on Bitcoin, long-term bullish. Has your outlook changed very much since we last spoke? What have we seen in the market?
Yeah, so let's take a look at the Bitcoin chart here. So people got so bullish a couple days ago when you had this major pop up. News had kind of leaked out, or supposed news had leaked out, that Amazon was going to start potentially accepting Bitcoin payments. You got to chuckle at this because it basically, as of the last 24 hours, Amazon denied it, and then no one can find any proof that any of this actually existed. There was talks that Amazon was looking to hire people that had knowledge of crypto, and there's no one can find any posts from Amazon saying, oh yeah, let's hire these people. So that's kind of interesting, but prices actually held the bounce decently well. Here you can see very clearly when we talk about confirmation. Here you see on Bitcoin, it hit the line. Here it pierced, which fooled a lot of people. A lot of people stopped out. A lot of people went short there and they ripped it up. Here they closed it below. Notice no secondary day closed below and they ripped it up. And you basically have found your way back to this upper range. So I know a lot of people got bullish on Bitcoin recently in the last day or so, but just be aware that it's just trading in this range now where you've just gone to the upper end of that range. Now, if you can break above this 40 to 41,000 level, you could actually get one more move up to about 50,000. But without breaking above it, you can't really say, oh, the chart is bullish now, right? In all fairness, it's neither hugely bearish or bullish. It's just trading in this channel of these two parallel lines.
Really interesting. And thanks for the concrete example there. Good to look at. Maybe we can dig a little bit deeper into this Amazon and Bitcoin news. Ultimately, it seems like maybe it was smoke and no fire. But if something like that were to happen, how significant would that be for Bitcoin? Are people right to be excited about this mainstream acceptance that we're starting to see?
Yeah. So number one, you shouldn't be surprised that just after it closed below 30,000, somehow this rumor slash news comes out, right? So I mean, it just kind of fits with the whole metrics of making sure you see confirmation before you really trust something. In this case, Bitcoin's breakdown, and also it makes you think that, okay, well, the institutions that bought that Pierce and people were stopping out of Bitcoin. It closed below 30,000. They were exiting. Well, who was buying? Well, probably institutions. And then they needed that extra juice to sell into the average investor. So they pumped it with some sort of fake news here and got it up there. And my guess is they were selling right around 40,000, which was right at the high end of that channel. Now, if that news did turn out to be true, or at some point in the future, if Bitcoin is adopted by Amazon for payments, it would be big news. I mean, Amazon is the biggest retailer in the world. It would be significant. It would show further adoption. And I do think that would be a game changer to see a company like Bitcoin adopted, just like if Apple did. We've seen Tesla accept payments for Tesla cars, but then they walked that back and they stopped doing it. So you got to start this wave of corporate adoption again, which is, in my opinion, once you see a flush out on Bitcoin down the line because of deleveraging event, you'll then see it consolidate and begin an upward trend, and more corporations will start to adopt it at that point.
Right. Also very interesting. I want to make sure to ask you about silver as well, which I don't think we had a chance to talk about in our last couple of interviews. We have silver this year still stuck below the $30 per ounce mark. That's been disappointing for some investors. What are your views on silver? What's holding the metal back at this point, in your view?
Yeah, so this is a good one, and generally I've been more cautious on silver. So you guys know, I've talked gold up, saying 6, 12 months out, I have my gold price target end of year out there, very bullish. Silver, I've been much more neutral on, maybe even slightly bearish, and it's kind of showing itself as of why, and I'll explain it here. So basically, silver is partially a store of safety, which is why it does move with gold somewhat, but it also has an industrial component to it. So you've gotten in a position now over the last couple months where people are starting to realize that the economy's robust surge right now is because people saved money during COVID, the lockdown. They're spending it now, but once they spend and go through that money they saved, what is the normalized level? Is it going to drop back down? And if it drops back down and people don't have as much money, is then there less industrial demand on the industrial side for silver out there? And that, I think, is why you're seeing silver underperform with gold and not bounce the same way gold has bounced recently. And I also think that the Delta variant plays into that same factor too. We don't know if there is going to be an added slowdown in the economy because of the Delta variant, which again would then influence the industrial side of the silver component.
That's really interesting. So people do maybe forget that silver has those two sides, the precious and industrial. So for you right now, would you say it's that industrial side that is driving the price more and that it's keeping it a little bit suppressed?
Yeah, for sure. And even with gold, I mean, it's not like gold has had the biggest rally in the world anyway. So it's not like gold is super strong. So if you take something that's, lukewarm to slightly positive like gold, and then if you matched it up with silver and you said, okay, the savings, investment portion from the safety trade of silver is lukewarm, and then you throw in the industrial weakness, it kind of tips the scale to slightly lower. And I think that's what you're seeing. Now, in all fairness, down the line, as inflation continues to show itself, which I believe it will, it's not going to go back to 2% like the Fed thinks. Silver will eventually regain steam and break higher, but you just got to go through this little period of consolidation and small pullbacks until then.
Do you have a price outlook for silver in 2021?
Wow, that's a tough one. I think I
It's
think
a
Yeah, I mean, I think by the end of this year, you'll see it here or a little bit lower. I don't know how much lower, but then I think in 2022 is when it starts to regain its power and power to the upside. So for me, for example, I don't have any, I haven't bought any silver recently as a swing trade or anything like that. But towards the end of the year, if it comes in a little bit more, I will absolutely look to accumulate and then look for a bigger move up in 2022.
Yeah, fair enough. And we do need somebody who's going to give us a little bit of a lower price outlook versus the very high ones that I often get for
Yeah.
silver.
And just to jump in, Charlotte, too, it's important to know that, like, I always view myself as being not necessarily a bull or a bear on anything. I really just focus in on the charts, and generally I'm a near term trader, so 3 to 6 months out, and I just go with what the charts are telling me. It's not a matter of my gut or my bias. Honestly, those are horrible. So if I went with my gut reaction to things, I'd be wrong most of the time. The charts are really where the pure, non-emotional reaction is, or the real reality is, and that's really what I try to go by.
Yeah, great point. And I love to ask you this type of question because we always get such interesting answers. But where are you seeing other opportunities in the near term now that we've talked about some of the metals?
Yeah, so gold continues to be something I'm interested. GDX, definitely interested in that. I'm short the overall equity markets right now, the S&P and the Nasdaq 100. Going to be really interesting with all these earnings that are coming out over the next week or so with the big tech players. And then I've been accumulating, and this might be a horrible situation and really not smart of me, but the charts right now on a lot of these Chinese stocks, which have just been clobbered so much more than even I thought. I have been accumulating them. I accumulated a little bit more today. I've been doing it kind of with just dipping my pinky toe in the water type thing because it is such a scary situation. But again, I try to just focus in on the charts, and the charts are saying, all right, buy best of breed right now, the Alibabas, the Baidus, and just kind of inch in a little bit and see if you get a technical bounce.
All right. And would that, though, connected to those Chinese stocks, would that be related to a COVID recovery over there that
Yeah,
we
it's
could see a
it's it's
bounce?
more. Yeah, so with the Chinese stocks, I mean, the Chinese government is just hammering with new regulation and fines and restrictions their companies. It really seems like the Chinese government had this 100-year anniversary, and they must have made this big plan for kind of change, and they're just trying to reestablish themselves as king of the hill, essentially, as maybe some of these companies were getting a little too powerful. They've really started to kind of crack down and say, okay, we want the smaller, the poorer, the middle class in China to make sure that they're doing well. We don't want these big corporations to just become too powerful and then dictate policy to them, right? So it seems like that's what's going on. My hope is that they kind of get their point across and they establish themselves, and then they step back and let their golden gooses, if you will, these Alibabas, $500 billion companies, kind of take over and do their thing again, and then you can see those stocks really perform well. But it has been nuts, and again, the relations with China and the U.S. are certainly not great. So you wonder what kind of avenue is that could be also hurting these stocks a little bit.
All right. And one final question for you. You mentioned gold, of course. Are you seeing any opportunities among the gold stocks? Anything, any individual companies that you're looking at, or do you look at them more broadly as a whole?
Yeah, I certainly look at the gold stocks individually. I usually, if I'm looking at the miners, I'm kind of focusing in on GDX, which is the gold miner ETF, because therefore you get kind of the wider, angle versus individual stock risks. But like a Newmont Mining here, it's been consolidating now for the last really 2 years. In a range. Eventually, I think that breaks out, especially when you see one of the interesting things. Consolidation is known by going choppy to sideways after a big move up, and the longer you consolidate, the bigger the move up will be. So if you have a horizon of 6 to 12 months, Newmont Mining is a great opportunity there, because when it breaks up, it should make a big move. A great example of long-term consolidation is Microsoft. Microsoft was trading like $25 to $35 for almost 20 years. And that was after it had that big run early on in the late 90s and the early 2000s. And once it broke out, we all know where it's trading now. It's had such an incredible run. So always look for those choppy sideways patterns in the upper ranges of moves, and they can be good setups for major moves to the upside.
All right. Well, thank you so much. I think we'll leave it there for today, unless you have any final thoughts you want to share or perhaps you can let people know where to find you if they want to learn more from you.
Yeah, just find me on Twitter at Gareth Soloway at my first last name. That's a great place to kind of come and get free information. And then if you still like what you see, you can always come to inthemoneystocks.com, where I run a service where I give out all my swing trades, exact entries, and exits.
Perfect. Well, thank you so much for coming on. Great to see you. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway with InTheMoneyStocks.com.